I'm back. Shit's hard. It's not easy. I can't. I can't think of anything except for this could be Chris Swiss related. Since the government said they're not going to help him, so that's all I can really think about in this area. Uh, it's really condensing here, so let's see what this does. I'm gonna be trying to mitigate risk at 90 through 50. And again, let's see where this goes. Currently long right now at 92.25. As always, I'm just gonna let this run and see where it goes. If it stops me out, I'll break even, so I'm fine with that. I'm out. I'm break even. Guys, just to let you know, anyone in the US, lending closes later, so pay attention to that. Right now, fuck's sakes, dude. Now it's gonna run. Look for 93s. Don't buy this yet. This should become. There should be a back and fill to 93. I think. Between 93 and 94. A lot of selling right there. There goes your 93s, 94s. Out 9050. A lot of selling. This might take long for it to play out just because they're waiting for Europe. The whole credit Swiss thing is actually a big thing. So It's all here government, so really choppy here. So yep, Timo. See what it does. It's wedging out pretty hard, guys. So just be careful with this. I think we need to let it settle first. What is this Korean thing, Ryu? I think there's more downside to be had. It's pretty fucking insane. 800K loss. Oil inventories and finance.
I figured I'd mention this since I returned to voice yesterday. Main reason I abruptly departed is I really have developed a minimal tolerance for what was being expressed by somebody that joined yesterday. I will say that.
Oh, where's Harvey today?
Living life. Oh, Jesus Christ. He's being hammered right now. Oh. Risky was saying 2 days ago, oh, yeah, I'm long banks. They're horribly oversold right now. Oh.
Jeez. He didn't even anticipate Credit Suisse and stuff like that, probably.
What?
Credit Suisse?
Yeah, well, you have Credit Suisse and then I want to say 5 or 6 other banks in Europe which have been halted.
Yeah.
That's why
This thing by you sent some guy loses 800K.
I ended up abruptly departing from voice chat yesterday.
Oh.
I'm not here to measure dicks. How's your trading this morning?
I don't understand Korean, but Ryu, are you sure he's short? Because Ryu, he's long, or at least, I mean, where I'm watching it, I mean, it's quite a long video, but it says that he's long from 25,980. Or am I reading this incorrectly? I'm watching it at 427, so maybe it's the wrong timestamp. I don't know. Okay, now he's short. Okay. I fast forwarded. I mean, so he made $1,000. Okay, never mind. Let me see where he covered his long. It's down 5K. Okay, so he basically covered his long minus 4 plus. Let me see.
Yeah, I'm looking at 112. He looks quite nervous.
I mean, it's kind of fun watching shit like this, though. To be honest.
Ryu, therefore, he continuously adds to losing positions. Is that what you're implying?
$112. Okay. Holy fuck. I mean, how does this guy continue to trade after taking $800,000 loss? I mean, clearly he didn't stop, right? He just kept on going. This guy's a fucking idiot, man. He only closed this trade because he couldn't take it anymore, basically. Because that's not a point of invalidation. That's just him fucking can't take it anymore. I don't read Korean, but I bet you all his chat people are just laughing. You read Korean, right?
For anyone that codes GPT-4 released yesterday, you have access to it on the GPT Plus, but the API isn't available until they email you.
Did you hear about the new one? There's a new AI one?
Yeah, GPT-4. It released yesterday.
Oh, it's really. Can you
Yep.
sign up for it? No.
If you use the subscription model and you're not leveraging the API, then yeah, you have access to it for $20 a month.
Oh, cool.
Which the main improvement, well, there are numerous. It's the main benefit or main use case is the token amount goes from about 3,000 words up to where it can summarize 3,000 words up to about 50 pages.
Oh,
So 3,000 words up to 50,000 words roughly. And I was playing around with a couple libraries last night. There's actually a way to extend that up into a couple hundred pages of text, which it can summarize. I'm hopeful that I have access to the API soon. Lol. Oh, what's cool about it is there's also the aspect of the consumer grade version doesn't have access to it, but the integration of image processing and computer vision, where before it wouldn't perform well on anything related to mathematics. Now, because there's the computer vision component integrated into it, it actually can do math really damn well.
really?
Yeah. Here, I'll forward you this. I was watching a live stream yesterday with some examples. This will provide good reference. Because if you look at the recent model, GPT 3.5 or 3.5 Turbo on the far right, how it performed on the APBC Calc exam or on really anything related to quantitative. I think I have a link to this. Let's see if I still do.
Wow, interesting. I'll be right back. My wife is calling me.
I realized my mic has been on mute since I've been speaking, and I assume no one could hear me. Oh, geez, that turned out well. Wow. I'm bored, so I'm playing around right now. And a slightly different. Yeah, I'm bored. I'm playing around with nearly an entirely discretionary strategy. It's a bit of everything. Also, for anyone that actually is interested in learning to backtest their strategies, well, let's say you are still not a profitable trader and you spend a year and a half learning the libraries supported by, let's say, VBT. You're going to have a pretty comprehensive understanding of financial data science and analytics, which the skill set that will provide would be equivalent of about $100,000, $140,000 job. It's a life skill and a professional skill. Yes, for real. If you can show projects that you have built and you're applying for a position as a data analyst at a financial firm, that's going to easily pay $100,000 a year. That's why I recommend also, when I was saying, I was long. I'm playing around with the strategy. Sorry for the delay. Whoa, that was the sell order. Sorry. Wrong order. Prematurely sold. More, as I said, I'm a bit bored. So here was the buy. This was the buy order that ended up filling. Oh no. Well, I have paper hands from a discretionary perspective. That's why I don't. Most of those jobs can be remote, yes. So here you go. This is why I took the long. It uses vol expansion, vol contraction, and then taking a pretty much high volume node where 80% of the volume is concentrated in a wick, and then trading off that, very similar to an old strategy I was running, but slightly different visualization. But yeah. Yeah, I have paper hands. That's my issue. Holy fuck. This would have already been a 60-point ripper. Well, this is exactly why I tell people who are newer to trading. I apologize to everyone here. Fat Cat is an exception. He can trade exceedingly well off the DOM. 99.9% of people cannot trade well off the DOM. It's not a transferable skill set. If you are interested in learning how to trade, developing a transferable skill set is integral, because if you take a year and a half to learn how to quote unquote trade and understand the data analytics portion of it, you now have a transferable skill set to go pursue a profession to support your trading interests. 200 hours is enough, yeah. If you understand pandas, numpy, numba pretty well, congratulations, you're a data analyst. What's Zero's new group? As I said, this is why I trade. I don't rely on discretionary. I can't hold trades. Those are often going to provide the best compensation because, granted, VBT is oriented around financial data analysis and data science. But those skill sets are transferable to anything related to big data. What's most important is you have projects that you can show or discuss when applying for a position. They don't care about the backtest with negative expectancy. They're more concerned about, can you use the necessary libraries to assist with their objectives? Can you perform data analysis? They tell you, we want to know what happens when X, Y, and Z presents. What are the expected outcomes? That's all they care about. You're not going to be leading a project. You're not going to be developing your own strategy. You're not going to be a trader initially for them. Well, highly unlikely. You're going to be in a support role on a desk. If you're on the trading side, that's if you continue on the trade side, you're going to be on a desk supporting traders who might have a thesis and want statistics on that. If you're not in that aspect, you may be in other areas of the firm, such as time series analysis, projection for profits, for growth. And VBT is teaching you a lot of the integral aspects to being able to perform the necessary analysis. What's most important is it's a transferable skill set to different professional pursuits. If you realize you're not profitable after X amount of time, well, it's not as if, imagine going into an interview and saying, yes, I was staring at a screen for the past year and a half. I can look at numbers move up and down. Versus, yes, the past year and a half, I've emphasized learning how to approach problems from a data science perspective, leveraging pandas, numpy, numba to accelerate the process and reduce latency, as well as time series analysis. Great. You spent the past year doing this. You've acquired a skill set. You're interested in improving yourself through self-learning. That's very attractive to an employer. That you are taking the initiative to learn on your own and improve your existing skills rather than requiring a degree. Let's say you have, even or without a degree, let's say you have a degree in underwater basket weaving. But you take a year, and realistically during that year you're trading. But who cares? You don't discuss that. You can discuss everything you've learned through data science to process what was required, your abilities, what you're comfortable doing, where you want to improve. That's awfully appealing to a company.
what was that acronym you used?
Which?
I came in late, like VVT or DVT.
VBT. It's vector BT. It's the best library for backtesting a strategy in Python.
Oh, I didn't know about that. I'll have to check it out.
Yeah. If you're comfortable with Python, pandas, NumPy, Numba, then you'll quickly be able to understand how to construct the backtests. A lot of it's predicated on building your own signal funcs and then being able to replicate the orders. But once you can build a signal func, everything else is pretty arbitrary after that.
Yeah. It's hard to backtest correctly. Like so many, like the devil's like really in the details. Basically
yes,
need libraries for it.
Well, it depends on one's strategy.
Yeah, that's true. That's true.
Because you can easily integrate with VBT, pattern analysis, pattern recognition. And if you're solely a technical analysis trader and you want to see a double top with confirmation of cumulative delta ticking down, you can backtest that in 15 minutes.
Have you ever used Zorro?
No, I'm familiar with it, but no, I haven't.
Yeah, I remember looking at it. It seemed pretty cool as well. It seemed kind of like Vector.
I'm looking at it right now. My main concern with most backtesting libraries is they are not actively supported, or the repositories aren't updated frequently. And the developer for VBT, this is his full-time pursuit. He's making exceedingly good money doing it. He pushes updates at least once he pushes feature updates about once a month. And if there's an issue in the actual, if there's an error arising in certain aspects of the code for users, he'll push an update the same day to address it. On like Backtrader or backtesting.py, most of those aren't actively managed.
Do you have like do you have a ref link
For
Vector BT?
There's the generic version of Vector BT, and then there's Vector BT Pro. I'm trying to.
It was invite only, huh?
Well, I don't. It's quote unquote invite only, as in $25 a month.
Oh, okay. Well, if I bought it, is there like a ref link I could use for you?
No, there isn't.
Okay.
Because it's significantly better documentation, tutorials, access to the Discord / direct access to Pollock, who is the developer, where he addresses most of if you have a question, he typically responds within 15 or 20 minutes. The Discord in itself is worthwhile, but realistically, Vector BT is usable without Pro. However, the repository is not actively managed or updated, which is the primary issue. He is not pushing updates to the regular version of Vector BT.
At all, or just not as much?
Let me see when he last pushed an update. I don't think he has pushed an update in. Yeah, he hasn't pushed an update to the regular version in 6 months. He's not concerned about the regular version. It's still usable, but it still works well. However, the feature integration to Pro is substantially better. And having an individual which can answer your questions nearly immediately makes it worth $25 a month. In itself, along with the tutorials, the documentation is substantially better.
You have any experience using like alternative like data frame libraries like polars or something?
Supports polars. I actually started using it recently to reduce a bit of resampling latency with tick data. But
Yeah, that shit can take forever. I have a pretty good computer.
Polars integrates pretty well, actually very well. The code right now that I have is fully optimized in polars and Numba. The resampling the live data, I have it running in about 30 milliseconds to resample incoming live tick data. I could reduce that a bit
all
more.
tickers or
no for ES, NASDAQ, crude. I have that resampling down to 30 milliseconds. So I can reduce it a bit further through additional optimization. But yeah, it pretty much anything data science related, the packages are going to be integrated into VBT.
You're talking about like aggregating ticks, right?
Yeah, aggregating incoming tick data.
Yeah.
Eurex is a bit of a different discussion because that's drinking through a fire hose, and I do determine a solution for that.
Eurex? Oh, the exchange.
Yeah. The amount of data coming through Eurex, I don't care what computer you have, unless it's fully optimized, because my main, well, granted, I use my laptop far too much, but my main PC is running 256 gigabytes of memory, a Threadripper, and 48 gigabytes of VRAM, since I have two 4090s running on it. Eurex data tears it apart.
May need something better than polars. I know there's a few things that are like even significantly better than it, but they're probably not that easy to use.
And I assume it's not natively in Python. It's most likely Go or
it's like wrapped C. Yeah, I think it's a wrapped C Python library.
Because I may transition my pipeline to Golang soon. We'll see.
Oh yeah, would be the reason for that?
Runs about 40 times faster than even heavily optimized Python code. It's It's an entirely unnecessary conversion because, okay, great. I can reduce my latency from 30 to 40 milliseconds down to 1 millisecond for the resampling. I'm not a low latency trader, but Rust could work well too. But the benefit,
learning Rust.
What?
Good luck learning Rust.
Yeah, I don't want
that shit's weird.
I have no interest in Rust. Let's see. Okay. You have Belisarius. I'm not proficient in Go, but the person with whom I'm working on some of the projects right now, quote unquote partner, is he's more than proficient in Golang. And the benefit predominantly is the concurrency associated with Golang and the garbage collection, which allows you to reduce the resampling time in a pipeline down from the initial 30 to 40 milliseconds in heavily optimized Python to 1 millisecond or less. And also the efficiency, it's exceedingly lightweight compared to Python, where it can operate with minimal, pretty simple specs on a VPS, or if you're running co-location. That's the other appeal to it, is not only the improvement in garbage collection concurrency, accelerating resampling time for tick data, but if you are, let's say, running a splitter and training the data on the splitter, it's going to further reduce the execution time. And I need to develop better. Python's still for backtesting. I'm saying Golang specifically for running the pipeline. And if I'm co-locating on when I say pipeline, you have the strategy constructed in Python, and then the pipeline is what is intaking the data, quote unquote, your garbage collection, and then processing it, where much of the execution is still, or much of the processing is still occurring in Python, but Golang entirely for the resampling, because the most hardware intensive aspect is the resampling of incoming tick data. And so having improved garbage collection and concurrency reduces the latency significantly.
You mind if I send you a friend request?
Yeah, certainly.
Ask you some stuff later. Yeah, obviously nothing like proprietary, but
I am dead transparent about how most of my strategies operate anyhow. I'm not one of the dicks that says, oh yeah, I'm not going to say anything is proprietary. Fuck those people. It's if someone wants to try to replicate something, great, by all means. This isn't my IP. It's based on fundamental theses, and the main difference being my understanding of how market makers operate due to being well integrated into the space, the requirements for a market maker on an exchange. Someone can try to replicate an idea, but unless you have a full fundamental understanding of the actual market mechanics underlying it, it's inherently far more complicated, which is why I'm try to be reasonably transparent in many regards. There are too many people out there, oh, it's fully proprietary. Yeah, it's quote unquote proprietary because you don't even understand the own shit, and you're claiming that for the reason being is you don't understand what you're doing. So
yeah, my LARP alarm goes off when I hear that kind of shit sometimes.
As it should. If someone claims, it's my friends that are working at Citadel and elsewhere, yeah, there are NDAs which are signed, but we still can discuss underlying market mechanics and the underlying market mechanics regarding the exchange requirements. They can't disclose the code they're running, but we still can discuss how something operates. I don't have $5 million to $10 million a month to spend on infrastructure costs. They can say what they want. Realistically, I can't replicate that.
How long have you been doing this? Like, I guess, like at this kind of level, I would say. Like, how long have you been automating your strategies?
When I fully committed to that was, fully automated. That's my entries for the past 3 years have been pretty much entirely automated. Obviously,
Wow.
the most complex component of that, as I say to everyone, is entries are the easy part. Determining ideal stop loss and take profit parameters is very complex. That's the toughest aspect of automating any strategy. And in that regard, I've been about 50-50 up until about 6 months ago. Now practically everything, but full-time trading, I've often say August of 2017, which is when I incorporated. Granted, I was still in university then, but that's when I considered full-time because that's incorporated and based on tax filings. I technically was a business entity at that point, so that's when I would say full-time. But automation, late 2019, 2020 for entries, and then it's been a pretty laborious process for the stop loss, take profit components of really any given strategy for past 3 years. So probably 6 to 8 months where take profit and stop losses are almost entirely. I'm practically removed besides from the daily oversight of ensuring no system errors arise with, let's say, streaming of data, where occasionally I have 3 data feeds plugged in. Occasionally there's an issue. That's quite rare. I have 2 execution, 2 platforms for execution, CQG and TT. CQG is the backup. And then DX feed and active tick for solely data. But I have data from TT, CQG, DX feed, active tick all integrated into it.
Do you have any tips, like as far as the something you figured out works when it comes down to like figuring out TP and SLs, at least in an automated strategy?
To be entirely candid, TP ladders. Gradually scale out the position. If you're trading futures, use micros to your advantage and trade 4 or 5 contracts of micros. And gradually scale out of that position, because I've modeled take profits and stops solely on volatility. Volatility based on stops works well. Volatility based on TPs is painful, because if you are predicting a 100+ point move and the market moves 75 points, your take profit's not going to hit. It's going to go 80 points in your favor, and then you're going to be stopped out, let's say on NASDAQ, for minus 30 points. Well, shit. That's 110 points from the high to the low, and you're being stopped out. Versus a TP ladder. When you have a TP ladder integrated, you can start running statistics on, once my first take profit is hit, what's the probability that the second take profit is hit?
Exactly.
Then you
smooth out your EV curve.
Then you can move your stop to break even, so that once your first TP is hit, you can move stop to break even, cover fees and commissions. In worst case scenario, you break even, you make a little bit on those trades, versus it going 80 points in your favor and then coming back 110 points for you to be stopped out.
And you still got to pay for fees and everything.
Yeah. Micros are a blessing for anyone that wants to trade with less capital, running TP ladders and scaling in and out of positions.
Yeah, they really are great. The amount of exposure you get for the fees is kind of crazy.
And Belisarius, in a couple days, Oleg is integrating or releasing dynamic TP ladders. So, and time-based stops.
Who is?
The developer of Vector BT's library. He's pushing a features update in the coming few days.
Yeah, I'm definitely going to check out Vector BT. That's a pretty reasonable price, for sure.
Yeah, even if it was $25 a month, only to have access to the Discord. But the improved documentation, tutorials, and everything to and from that, in itself, I think it's a really good course structure for someone that wants to learn financial data science. If someone came to me and said, hey, I'm really interested in financial data science, where should I start? It would be pay $25 a month, start with the Vector BT tutorials, and then build to your heart's content. Pretty much Legos. It depends, Belisorius, if you are interested in the data science aspect or the actual architecture. Because if you wanted to pursue being a back-end architect, then yeah, that would make sense. But from a data science perspective, as long as you have the library supporting what you need, the back-end isn't fully necessary. His tutorials cover the back-end component about how something is constructed. Let's say his Supertrend tutorial, he goes through pretty thoroughly of how to construct it on your own, how to then go to pandas, or how to then go to NumPy, then Numba for fully optimized cache instead of constantly looping it. That's where it makes sense to understand, quote unquote, under the hood or the full back end of it. But the back end is the rudimentary perspective of you're going to then have to go learn each of the individual packages and how each of those packages is constructed. If you want to take hundreds or thousands of hours to learn the individual nuances and intricacies of each package, be my guest. But I don't think that's particularly necessary. It's, as with anything, it's more important to know how to use and leverage a library than it is actually how to construct it from scratch. Very similar to how I use OpenAI's APIs. There's not a chance in hell I'm going to write 35 to 40,000 lines of code to replicate what Whisper does. I have a decent understanding of how it works, but for me to replicate Whisper, that would be 35 plus thousand lines of code and then all the training data sets. It's not really worthwhile. It's more important you know how to use a specific library for said purpose. You know the right tool for whatever you need. That's the most crucial component.
You using Whisper for like news trading or?
No, I have some other projects on which I'm working completely outside of trading, more or less for fun. But if I can monetize it, which I intend to try to monetize it, I will do. Worst case scenario, I learned something new and it's a fun side project.
Yeah, messing around with machine learning and AI stuff is really fun. It can be so creative. It's kind of cool.
That there's the aspect of creativity, but also in 150, 200 lines of code, you can have a fully functional chatbot trained off of or fine-tuned off of whatever you want. One in the past, that would have been tens of thousands of lines of code to construct your own GPT, to then train the model, to store it, to then have NLP integrated. There are a couple of libraries which aren't offered or which Whisper doesn't support natively, unfortunately. One of which is, where did this go? One of the important components is speaker identification. I'm surprised Whisper doesn't have that integrated, but I'm having to use a couple different libraries for speaker identification since I'm training. I'm transcribing YouTube videos, and I need to identify the speaker to be able to filter out what else is or who else is speaking, since the model is only supposed to be trained on one individual. I'm hopeful Whisper integrates that soon, but it may be added 80, 90 lines of code to be able to integrate speaker identification.
So what have you been doing now? You just like try to split it up and then like do the what is it called, ASR on each individual one?
What I am doing is broad view. I am trying to facilitate more or daily interaction between content creators and subscribers through fostering more personal relationships where a subscriber can interact with pretty much the chatbot slash model where they nearly perceive them as a friend. Because if you can increase the interactions between a subscriber and content creator, there becomes a near dependency because it's then perceived as a friend. Where if they're texting them daily, if they're doing anything, and the monetization aspect of your subscribers now have become far more valuable because they perceive you as not only someone that creates content or an entertainer, but an actual friend. And that's why the models have to be trained specifically on that individual, because of it needs to respond and be able to replicate how that person portrays themselves on YouTube or on whatever online profile they have.
That's pretty cool that you can do that. You can like tailor like a LLM to a specific person.
It's absurdly easy too. That's what's beautiful about OpenAI's libraries. Makes it really easy to do that. And as I said, it's a fun side project. If I can monetize it, great. Which I'm thinking in the next 2 weeks, I may start sending out blast emails. And since I have a pretty rough estimate of how much many of the content creators are making on an annual basis, I'd be looking to charge about a 1% fee of their annual earnings.
Or like 1% the service?
Yeah. What?
For like the service, like rolling it out for them and everything. Would you be like doing the infrastructure and everything too?
There really isn't much infrastructure because the main component is going to be storage of the data. And depending on the service they want, I would host it via AWS and build that into the fees. There's the fixed monthly fee. And then I would have if I know they have X number of subscribers, I would assume a maximum of 5 to 10% of them would use this, potentially more, but 5 to 10% is initially quite generous. And the infrastructure requirements for 5 to 10% of them, that would be included in the the monthly fixed rate.
That makes sense, yeah.
It depends on your hardware, Belisorius. I can go through about an hour-long YouTube video and have it fully transcribed, vectorized / embedded, and stored to a file in 20 seconds. Therefore, let's say someone has 1,000 videos. Okay, 20,000 seconds. That's not all too bad to train on an entire YouTuber's video.
Per video?
Oh yeah, this is all video. So about 5 hours per large YouTube channel to fully train, vectorize, and embed the code. And then once I have the embeddings present, there's now the I'm waiting to have access to GPT-4's API, but once I have access to GPT-4's API, then there can be full summarization to responses based on the embedded code. So
yeah, I was wondering, like, if you get GPT Plus right now, you don't have access to API. Do they not have one yet?
They are rolling it out. There's an 8K version and a 32K version.
Token size or
token size, so right now GPT 3.5 can manage about 3,000 words of text, which it can summarize. GPT-4, you're looking at about 50 pages or 45,000 words. I will post this. Hold on. Okay. This repo allows you to take a model from about 8,000 tokens up to 292,000 tokens through storage. So you could go almost to a couple hundred pages. Give me one moment. I'll be right back.
All right, guys, I'm gonna take a break. I'll be back later. If you have any questions, just let me know. I'll talk to you guys later.
Okay. I needed some Rice Krispies. Okay. I don't know. It's the machine learning by the stories is more or less an extension. It's something you learn predominantly on your own, where you see application, where you see use cases. I don't think it's particularly prudent to begin learning for the purpose of I need to learn this for no reason. Determine a use case, go learn. I don't know if there are any additional questions. If not, what time is it? Probably going to start cycling in probably 40 minutes or so. I need to hop on a call first, but yeah, probably start cycling in about 45 minutes. Debating if I'm going to do a zone 2 ride or something else.
What do you mean by cycling?
I usually ride for about 2-3 hours a day.
Oh, like on a bike.
Kind of like, yeah.
Like a Peloton?
I fucking hate Pelotons now. Hold on, give me 1 minute. Okay. That's what I'm trying to decide, Peter, if I'm going to do a zone 2 ride, which I realistically should, race, or a interval / hill climb workout. This is to what I'm referring. Oop. In
Damn, that thing
conjunction,
looks sick.
yeah, in conjunction with Swift. So 2.5, 3 hour, well, probably 2 to 3 hours, depending on what I decide to do. Zone 2, I'll do probably 3 hours. Intervals, probably that would be hour 45, 2 hours of intervals.
You seen those rowing machines?
Ergs?
What'd you call it?
Ergs.
Yeah.
What about them?
Oh, it just seems like a fun way to work out.
What type of ergs? Are you referring to Concept C2? The traditional?
I don't know too much about it. I just know they exist. I have no clue.
These are pretty much the quote unquote nearly the gold standard for anything and anything, or everything and anything.
I was talking about the ones with like water in them.
Oh, those are horrible at replicating actual rowing, because in high school
Really?
Yeah, in high school I rowed a fair bit. And yeah, it doesn't replicate. It's not reliable or consistent for actually pacing. So for training purposes, Concept C2s by are considered gold standard. That's where if you are attempting to achieve, if you want a 2K record or something else or 10K, it has to be on a concept C2 or indoor rowing. Let's see. I want to see how many people are going to be on one of the group rides. Oh, okay. There's actually a decent number of people with the pace partner today. Ooh, okay. My only complaint about training frequency is it's an absolute pain in the ass to eat. Whenever I've been out in California, most of them do live in California. I've met up with a couple of them to ride. So yes. Bellasaurus, that's easier said than done. When you're burning 3,000 plus calories a day cycling, you simply aren't hungry. As yesterday, I want to say it was about 3,400 or so. Actually, I think 36, 3,700 yesterday. Oh, no, I'm not. As I said, this is more or less a fun discretionary aspect of I'm bored, I'll play around with it. Just, it doesn't sound good at all, but whatever. That's what occurs when I'm a bit bored waiting for something is occasionally I decide, oh, let's try this out with small size. Finally, a longer episode of The Mandalorian. Considering the season first episode was 38 minutes, then 45, now 59 minutes. I found season 3 a bit disappointing thus far. I don't know about you, Fruitfly, but it's been an awfully slow start compared to previous seasons. Yeah. Because if I do, I've been watching it when I do a Zone 2 ride. Although The Last of Us season finale was reasonably good. It depends on if you see a use case for it. If you're training an NLP model, it allows you to exceed existing restrictions for the size of a document due to the tokenization. Right now, existing models such as GPT 3.5, since GPT 4 hasn't been released, you'll only be able to summarize about 3,000 to 4,000 words of text. Using that, if you integrate it, you'll be able to summarize 100, 200, 300 pages of text. So if you see a use case for trading, then yes, it doesn't have to be for it. But for summarization of financial documents or large data sets, then yes. Well, it pretty much is an extension for GPTs. GPTs are limited for text summarization by the number of tokens allowed. But if you're storing those tokens in an existing database, you can then expand and extend the ability for text summarization rather than segmentation. The segmentation is initially required where if you want to do at the moment 50,000 words, you have to summarize 3,000 words at a time and then amalgamate that into a single into a single document and then summarize the single document versus taking 300 pages and being able to summarize 300 pages. There are already people that are doing summarization of books. Yeah, you can do it. You have to use one of OpenAI's other libraries, such as Whisper or another NLP library that would transcribe a video But the video transcription process is quite easy. You can run it on Powell's. You can run it live with Whisper. So taking, let's say, Powell's speech and putting that into a text format and then have a trading decision based on it. So indirectly, it relates to trading. If you see a use case in trading, I'm not using it for trading. If you're investing as a long-term investor, it makes sense for analysis of earnings calls, particularly to summarize and then pretty much to transcribe the earnings calls, vectorize it, and then be able to provide some semblance of summary based on what you query. That's all you have to do is fine tune existing models through the data you feed it. These are all related to fine tuning a model. Fruitfly, they haven't integrated the computer vision / image recognition yet. Once they integrate that to the consumer grade version, it's going to be a substantial improvement. If there aren't additional questions, I'm going to start warming up to cycle probably, since my body needs about 45 minutes of warm up before I even start any semblance of steady state. Therefore, I'll be back on tomorrow, highly improbable, later today, unless, no, I don't touch Sierra chart for quote unquote that. The only circumstance I've used Sierra chart for actually trading is on Apex accounts, but it was, I had to build a custom ASOL C++ study to interface because everything was processed in Python and then created a TXT file. TXT file would be picked up by the DLL study. The DLL study would communicate to Sierra chart how to execute that. I hate C++, so no. The only C++ I had to use was building a custom study to extract the trade information from the TXT file that was created through Python. I don't care that it's faster than Python. It's not faster than Python for prototyping. If you have an idea, it's significantly faster to prototype that. Also, none of us are low latency traders. If you're a low latency trader, then yeah, C++ is better. But unless you're a low latency trader, C++ isn't worthwhile.
it's as predominantly retail, your primary job coding is data science and evaluating whether or not a thesis is valid. Doing that in Python is substantially faster and more efficient than C++. Yes, but C++ can do DL as well. Although I don't have any interest in having a dependency on Sierra chart. Most of my strategies are executed anyhow on TT. And since TT supports a REST APIs plug in directly to Python sockets. All the strategies which I'm running are pretty much able to execute in under resample, process, and determine a decision in under 30 milliseconds, 30 to 40 milliseconds. I could reduce that further by changing the pipeline, but 30 to 40 milliseconds, I don't need it any faster than that. Right now, my stop losses on NASDAQ are 25 points. My take profits are over 100 points in many circumstances. It's an intraday swing trade. If I have 3 or 4 or 5 ticks of slippage, which unless you're trading with decent size, that doesn't occur. Well, retail shouldn't be trading every 30 milliseconds. You don't have the necessary infrastructure or you don't have the bankroll to be trading 30 milliseconds or microseconds. I can say with definitive certainty, no one here has the bankroll to be a low latency trader. What do you mean without limit orders it could work nicely? No one here has the bankroll to be a low latency trader. As in, most of your transactions are under a couple seconds. If not less than that. The infrastructure cost associated with that is going to be for only a couple seconds a trade, tens of thousands a month. Once you're in the millisecond range, try a couple 100,000 a month. And once you're sub 30 milliseconds, infrastructure costs for that are going to be almost 7 figures a month. And then you're also most likely to have your face ripped off. Because co-location to be under 10 milliseconds is often going to 10 milliseconds with execution is often going to run at least 40,000 a month for that co-location service to have low enough latency to compete. And when volatility increases, you're going to be the last participant that's a quote unquote market maker to be filled. Thus, the slippage you incur is substantially higher. Yeah, most of my strategies are market. As soon as I have a signal, it markets. Yeah, on NQ, I'm not too concerned. Because I'm executing through TT, a market order is functioning similarly to a limit and market. It's an amalgamation between the two order types. Particularly for retail, TT is also the cheapest option for running any strategy on numerous assets or securities. No, Morphus, I have worked with market makers. I was going to also be employed by market makers. My friends are market makers. If you don't have the capital to bankroll the infrastructure, you cannot market. It's all about having the necessary money to be competitive with market making. If you don't have the capital, you cannot do it. Well, you can, but you're going to be hemorrhaging money. There's no EV with it. Well, I'm referring to, because Morphus is asking about market making and implying it's a valid option for retail, and it's not. Market makers work with an exchange. They have an agreement. That agreement stipulates that certain liquidity must be present on the book during specific volatility periods. And then there's the component of infrastructure. It's not trading every day. It's populating the book. There's a significant difference. Populating the book with orders when you have particularly, and this is referring to futures, you need to provide adequate liquidity up to at a minimum, certain notional value. If you're not able to provide that liquidity, you are not going to be able to, quote unquote, market make. Additionally, the exchanges require at least a maintenance margin to populate the book, which is still offering leverage. Most firms are using a notional value basis for contracts. So if you want to populate the book with 30 contracts, 40 contracts per side, or let's just say 5 contracts per order level, you're going to need at least a bankroll of 50 million to be able to enter that. And then you have your infrastructure costs to be competitive in the market making space. And when I say to be competitive with with Citadel, Susquehanna, and in several of the other firms, Two Sigma, which may be market making, you're going to need 5 to 10 million in infrastructure costs to be competitive with them. Then employing quants to assist with modeling of market microstructure. As I said, if you have $60 million to throw at a problem, be my guest. But it's not feasible for retail to say they market make. It's even more expensive to do it on equity exchanges such as NASDAQ. No, market makers are to facilitate liquidity, increase liquidity from a theoretical and practical perspective, increases market efficiency. Random would imply a perfectly efficient market, and no market is perfectly efficient. Market makers improve the efficiency because they tighten the spread. A tightening of spread assists with information being priced in. All they're doing is facilitating increased liquidity, and increased liquidity increases efficiency. Especially if you traded back in the 70s, all you had to do was follow the trend and then you make some money. Even though transaction costs were substantially higher, prohibitively high. Transaction costs were arguably too high in the 70s to trade intraday. Could be done, but prohibitively high. Market makers are not establishing big positions. They are filling orders for retail and institutional clients, but there are retail and institutional market makers, which serve entirely different purposes. For retail, no. Fruit fly, yeah. For trading correlations usually isn't the most prudent option unless you have concrete parameters. No, wait, without buyers, no. They will, it require, oh God. On a notional value basis, you're not tracking CFD markets, credit markets, swap markets. They are moving with orders, a significant number of them. Futures markets are primarily intended as hedging instruments. Unless you're tracking all of the derivative flows, all the spot market flows, you can't say that they are moving without buyers or sellers. If you are not tracking the full derivatives market along with spot, that cannot be stated. The purpose of a market maker in most circumstances is to reduce the arbitrageable spread between securities. And when that occurs, unless you are tracking the flows in every individual market, there are buyers and sellers moving price. The spot markets are substantially larger than futures markets. It's predominantly cross-asset hedging. In most circumstances, it's a basket of securities. And that basket of securities is being distributed across numerous instruments. What do you mean without buying power? That doesn't make any sense. The indices are weighted. SPY, SPX, NASDAQ 1000, DJI, IWM. And the flows into the indices or Microsoft are directly going to affect the pricing and weighting of SPY, SPX, NASDAQ, IWM, and the other indices. And therefore, the expected value of ES, NASDAQ, and the derivatives is going to change based on the weighting percentage. So buying does occur because of the rebalancing of a portfolio. The DOM isn't tracking the other derivative markets. It's not tracking the hedging that's occurring in. The DOM isn't going to show you hedging that's occurring in SPX, in ES future options, in the month ahead or the forward or month ahead contracts. The DOM doesn't show all too much. It's not worthwhile, Belisarius. It's capital intensive. It's not worthwhile. Are you referring to fruit fly? Are you referring to let me read this. Algorithmically or systematically? Or sorry, algorithmically or discretionarily? Because there's going to be a difference. Discretionarily, I really don't think, unless you are an outlier, I will speak for the majority, I don't think it's a particularly prudent option. All right, I need to head out. But hopefully everyone has a pleasant afternoon and successful trading thus far today. If you have any questions, feel free to tag me and I'll try to respond. Take care, everyone. Bye-bye.